Hello viewers, welcome back. We are now looking at the DCF schedule. This one right here is the one that we are doing the computations for, and this is going to be our part 1. So let's move and look at what we can be able to do in here. So let's try to move back into and try to see on our unlevered free cash flow schedule. So let's try to move a little bit. This unlevered free cash flow. Let me first delete this. Back to our unlevered free cash flows. There. Now, here we can see in this row down here, in this cell K28, we have the unlevered free cash flows. And the next schedule down here, it starts with the unlevered free cash flows, meaning the figures we have up there are supposed to be linked up to that schedule. So let's get started and look at how we can be able to get down to our DCF model, the DCF schedule, and we'll see what we can do from there. One of the things that we are going to do, we are going to need the unlevered free cash flows in this DCF. You are seeing from this row 44, these sections here, they need those values for unlevered free cash flows. So we are going to repeat them in this row 44 so that we can make use of them with their formulas and we see what we can do. So when it comes to time, and also when it comes to time to print this model, everyone can see on the DCF schedule the unlevered free cash flows. So these would be super easy to link up, because when someone sees a printed copy, they will need to know where are these values, where are they coming from that are feeding in the discounted cash flow schedule. So some of them we are picking them from the unlevered free cash flow. So we pick from K44. So we put in an equal sign here. They are coming as they are because they are going to be inputs in this cell. So we go up to the unlevered free cash flow up here in cell K28. Then we hit enter. Now we've been able to have that figure linked up to that point. Now, one thing that we are going to look at is we are going to make sure that we copy and fill those values right. So what we are going to do, we do a copy, Control C, use the Shift key and the right arrow to highlight, Alt ES to paste special, then you use the down arrow to go down formulas, and we have those values in place. Because we don't want to copy and paste, we shall remove these little borders here. So to avoid that, we just do a paste special. So now that we have those values linked up, we can move the cursor down to this section and we try to bring this DCF model into focus. So we can try a little bit to move, at least there we can be able to see some of the values, maybe to just like that, to have those values in place. Now let's remember that we always want to think about our DCF valuation in two parts. Part 1 is the discrete forecast. Part 2 is the terminal value. That's what we did from the first perspectives, or from the first videos that we had from the first chapter. We say these cash flows, they are mainly two. We have the discrete cash flows, and at the same time we have the terminal value cash flows. So what we want to start off in this section here, this row 48, from this point here, what we want to start off with is want to make sure that we have those values in there. So we are going to be in this section, this row 48, in this section where it says discrete forecasts. Now, so we are simply just going to link these up. So we are going to get these values, the values that we are going to get in this cell K48. We are just going to go in there and we put in an equal sign. We are going to link those values from those unlevered free cash flows that we have there. So we go up to the unlevered free cash flows in that cell K44. So we move up using the up arrow, hit enter. So we've been able to transfer those values. Now what we have to do, we do a copy, Control C, we highlight across using the shift and the right arrow, then we do a paste special, Alt ES, down formulas, press enter. We've been able to take all these values from this point up to there, but we've left only one value here. So that value that we've left, you've seen the corresponding column is within the terminal. So that's what we are going to discuss next. Now, that has been done perfectly. Now what we are going to do, we are going to this second row, that is row 49, and we are going to this section where it says terminal value, and it's going to be in this area there. Now, terminal value here, this is the point where we want to stop and pause for a moment. We have a terminal forecast here. This is a terminal forecast of 17,670,000 US dollars for the unlevered free cash flows. So that value is in cell P44. So the value of roughly 17.6 million US dollars in cell P44 will repeat and grow forever. That is the terminal value. In other words, it's the one that we are going to use to calculate the terminal value. So it's going to grow at a rate of 2%. This value here is going to grow at a rate of 2%. This is the growth rate, terminal growth rate of 2% in cell G49. And it's going to be indefinitely into the future. So what we are going to do is we are going to use the growing perpetuity formula, and we are going to go and put that formula right in this cell here, this cell O49. So put in an equal sign. Remember, for the growing perpetuity formula, the formula is the perpetuity formula. The formula is the terminal perpetuity formula is cash flow over the discount rate, which is R minus G. G is the growth rate or the terminal growth rate. So that's the formula that we are going to use. So this is the terminal cash flow or the terminal forecast, this one. So that's the formula that we are going to insert in place there. So what we are going to do now, we pick the cash flow. The cash flow is this line that you are seeing here. So we are going to grab the numerator as the cash flow of roughly 17.6 million US dollars from this point here. And we are going to divide. We divide that by, we open brackets. It's going to be our R, which is the discount rate or the work. So after opening the bracket, now we are going to the denominator, and we are going to have the R, which is our work, in G50. this is the work, minus, we are going to less off the growth rate, that is our G, which is the terminal growth rate, which is in G49 here. So we can close the bracket and now we hit enter. So we've gotten that value, 454,000 US dollars. So next up here, for this column here, row 50, from this point where it says total cash flows. So what we are going to do, we are going to use our favorite new shortcut, the alt equals, and that puts in the sum function. So we go alt equals, we can now hit enter, and we can see it has put in the sum function. So what we do a copy, Control C, highlight across using, we hold down the shift key, use the right arrow, then we go to alt es, paste formulas, and then we can hit enter, and we are done. We are done with that section. So for the next step, we want to progress to this row here. Let me just add just a little bit. This row 56, to this section where it says present value of discrete. That's the point where we are heading. And you can see we are going to figure out the present value, or the PV of the discrete forecasts, and the present value of the terminal value in the next section here, this one right here. So this is where we are going to figure out those values. But now we are only going to use the NPV function to have that in place. So we put in an equal sign, we say NPV. The moment you see that NPV comes up, you hit the tab key. It will open the bracket. Now, one thing it is asking for a rate. So in that cell F56, we've put in NP function and it has opened the bracket. So you can see right here, it is looking for the rate, and the rate is going to be our work, and work is within the cell G50. So we can use the up arrow, we go to G50, that is the G50, and we've picked that value there. So we put in a comma, and now what is asking for, it is asking for values. It is looking for values. So for the values, you don't need to select these values individually. You can just go up to this row for discrete cells, because these are the discrete values that we want, the whole of these. So what we can do, we can actually go to that section. So we can go and select all those discrete value at once, and then we close the bracket. So we can go use the up arrow to move all the way to this section. We start from that point. It is K48. So we use the shift key. You can use Control Shift then right arrow to highlight all of them, or you can use you hold down the shift key, use the right arrow to move, just to select those values like that. And then we can close the bracket, shift, or close the bracket, you hit enter. And you've seen we have those values right there. We've gotten the present value for that. So we do the same thing for the PV of the terminal. And the PV, the formula for PV of present value of terminal value will be almost identical. In other words, it will be almost the same, like the one we've just done for discrete values. So we put in an equal sign, put in NPV, we hit the tab key, and then we are going to grab this rate here. We are still using the same rate, that is our work. we put in a comma, and then we are going to select the values. We are going to base for these values in this row 49 here. These values where it says terminal values, we pick all these values here. We can start from this point right there. Then we don't need to select one figure by one figure. We can just use the shift key, hold down the shift key, right arrow, highlight all the way to that point. Then we can close, shift O to close the bracket. So since we have highlighted those values, now we can hit enter. So for the enterprise value, just to finish up here, for the enterprise value in cell F58, we are just going to put in the sum function. We can just use Alt equals to have that in place. Hit enter, and we've gotten that value already, 133,793,000. So it is 133,793. So those are the values that we have there. So we have now gotten those values there. Now what we want to get from this point here, these cells, these remaining cells here, those ones, we just need to have percentages there. What is the percentage of the discrete over the total, and what is the percentage of the terminal over the total? That's what we are going to get. We just get the percentages. So over here in this next cell, this G56 can come to this one. We put in an equal sign, that G56, and what we are going to do, we are going to put in the PV, this value right there. We divide by the total, that is the enterprise value. So we divide by this cell F58, this one. But now that F58 is supposed to be locked with dollar signs. So you can just hit F4 key just to have those in place. If your F4 key is not working, you come and manually put in those dollar signs. You use the shift 4 to put in a dollar sign, and even here, $2 signs to have that locked. In other words, we are locking the column F and row 58. So we hit enter. That has given us 39. So we can copy across so that we can have those values in place. So what we are going to do is we are going to copy this one, Control C, highlight downwards using shift down arrow, then Alt ES, down to formulas, using the down arrow to go to formulas, hit enter. So we've done. That's why you are seeing this one is 100%, because it is 58 over 58, which gives us 100%. So you can see from here up here that we have that F58 being locked with those dollar signs. So now, so that F4 key, if at all it has worked, it is the one that helped us to lock those cell references down there. So those small shortcuts, they help us to save a lot of time, and at the end of the day and at the end of the week, we find ourselves saving time. So what we are going to look at now, let's go to the next video, and we are going to look at how we can be able to get the rest of these other values. So let's go to the next part 2 of this video, and we'll look at finishing this section right here. So we'll see you in the next video.